American Enterprise Institute U.S. Research Strategy in Asia U.S. Alliance and former White House National Security Advisor Zack Cooper is here. Zack, just put the recent eruption in the last several days into perspective here.
Well, just as you said, the president seems to have overruled most of his advisors and gone ahead with the tariffs. I think the real question now is, what's the path forward? Is there a deal? Are the Chinese really willing to come back to the table? If you look at the markets and certainly the reaction in Beijing overnight, I think the answer might be no. The devaluing of the renminbi is a big sign, in my view, that the Chinese are in this for the long haul, and that's what they're trying to show.
But how much damage could that do, the devaluation of that currency and the real drop in trade with the United States, now no longer the #1 trading partner with the U.S.? How much damage has that done to the Chinese economy and will do?
Well, it's certainly an effort to prop up the economy, see if they can get at least a couple more months of solid growth. We never know whether any of the growth numbers in China are real, but I think you have to think that this is a sign that they're under some pressure, but also that they're trying to stay strong for the long term. This doesn't seem like a move that China would be making if it was going to be making a deal in the next month or two.
Zach, good morning. Mitch Rochelle. One of the things that's driving their currency down, or it's being manipulated as it's been reported, is they're also printing money to help stimulate the economy. How long can they continue to do that? How long can they continue to devalue their currency, whether they're doing it as a direct result of stimulus or to retaliate? But how long can that go on?
No one really knows the answer to that. I think the other question that's related is, how long can the United States keep doing this? How long can the Trump administration keep using tariffs as this tool? When does the concern about the 2020 campaign kick in and force the president to come back to the table and make a deal? And which one of those two sides is going to bend first? That's the real question, in my view.
Jack, do you have a question?
Zach, who I keep hearing that the U.S. holds a strong hand, and you can look at the consumer side of the economy here, and certainly that looks solid. But I mean, do you agree with that? I think of China as a country that has this relatively new middle class, right? They don't have the rich history of economic power that we have here, and I hear about a lot of Americans that are kind of hanging on right now, paying the bills. Who has the weaker hand right now in these negotiations? Who can hang on for longer?
Well, I think it looks like the Chinese are being hurt more in the short term, certainly if you look at the stock market shifts. But the real question, I think, is whether the Chinese Communist Party feels that it is under pressure because it's delivered decades of double-digit economic growth, and now that growth is slowing, first to 7%, now to 6%, and whether the tariffs are going to do more damage is a real question. But I think on the U.S. side, the real debate is going to be, as we get closer to 2020, does the president need to make a deal to make sure that he can get reelected, or is he willing to go to the mat with the tariffs?
I mean, I think the president, right, he promised to get tough on China. He didn't, and that's what he's done here. So I think in some ways it benefits the president the more people are taken off guard by the way he's doing things, because that's what he said he was going to do, and nobody else would ever do it. So I think he looks like a fighter for the American people. Whether the deal gets done by 2020, I'm not sure that's going to have an impact. One of the things I'm looking at, though, is now China's making deals with Russia. You know, they've approved deals with wheat and soy imports, and is that going to make a deal less likely?
That's a great question. I think we've seen the Chinese pushing out, trying to find other markets. I don't know that they're going to be incredibly successful in trying to supplant the U.S. market, but I think at the end of the day, one has to wonder whether the Chinese can really bear all of this pressure and for how long. But now that we're talking about this last $300 billion of goods, these really start to get into a lot of the consumer products that Americans are also going to feel more directly. And so I think the Chinese are probably hoping that maybe the Trump administration will pull back before it actually puts those tariffs on in September.
And just really quickly, Zach, we discussed it last week, but the idea that the 10% and additional tariffs was somehow pushed by an individual in the White House to force the Federal Reserve to cut interest rates again, that just seems like lunacy, because again, this is not something that the Fed can fix and might be a great deal more damaging to U.S. consumers and the U.S. economy, something that another quarter-point cut by the Federal Reserve won't offset, not by any stretch.
That wouldn't make a lot of sense to me either. I think the other question is, you know, are we going to get a big deal? Probably not out of China anymore, right? We're looking at a small deal, one that's largely focused on agricultural purchases, energy purchases by China. We're not actually going to talk about any of the underlying concerns that have been the biggest issues for most of those White House advisors, which are intellectual property issues, market access. Those things are off the table. So what's this additional pressure really going to do? I think that's the tough question for those in the White House that have been supporting it.
Zack, good to see you. Thank you so much for being here. Zack Cooper on China.